Good afternoon, George Cavaligos for HFT Bonds. New highs late yesterday afternoon, early evening, and it's been just grinding lower all day today. I don't know, how many times did we try to buy this thing today, Johnny? At least 3, and none of them worked for very much. You know, a couple scratches and a couple losers. So, now what? Well, Chairman Bernanke's speaking tonight at 6 o'clock Chicago time. We start to get a lot of data tomorrow morning here in the States. We've got a bearish engulfing pattern on the bond. We have close to a bearish engulfing pattern on the notes. Either way, we do have minor bearish reversal days here at a minimum. So we're looking for a little bit more downside, I guess, is the pattern here. Interesting stuff. I don't know if everybody sees it, but the JP Morgan customer survey came out early this morning, and as soon as I got that and I looked at it, it showed what went from almost record short positions last Tuesday to almost record long positions. I just want to say, WTF? Are you kidding me? Just on what? Yellen's confirmation hearing? It's safe to buy bonds again because she's going to keep doing QE? Look at where the bonds were when QE started. I think we're almost like 10 handles lower in price on bonds than when QE started. What's QE done? It's driven stocks higher, I guess. Hasn't done anything else for the other markets as far as I could tell. It certainly hasn't driven bonds higher, which is, I think, initially their stated purpose was to keep rates low, especially at the long end. I don't know about watching the curve here, but I get the feeling over the last couple of days we've hit some pretty steep yield curve levels. That ain't good for the mortgage market, guys. Maybe you should stop QE and see what happens. It might be better off. It's certainly not helping what you said it was going to help. But of course, we don't believe that anyway, do we? QE's help the banks. That's all, I think, personally. But that's just me. What do I know? I'm just some stupid trader sitting in some little room in Oak Park, Illinois. I don't know anything. But let's see. A little bit lower. Important support levels just below the markets here. The 132 even, 131.31 to 132 even area is pretty key. I'm not even sure we can get down that far in the bonds, at least overnight. Maybe tomorrow morning. We got a lot of data tomorrow morning. And then if you look at the notes, there's a bunch of clusters of support between 126.13 and 126.18. Let the market tell you first. Don't try to be preemptive like I was today. Wait for, you know, a better bullish signal is what I'm trying to say. Yeah, that's about it. Let's see what the chairman has to say tonight, 6 o'clock at this Economist Club. This speech has been kind of an important event over the last couple of years. I'm just not sure with Chairman Bernanke giving up his chairmanship to Ms. Yellen in January if he's going to take this as some kind of a, you know, market-moving thing. So we'll see. We'll keep an eye on it, obviously. All bets are off until you see what he has to say. So look for those levels below. Look for a bullish reversal off those levels before you jump in with both feet. And see if we can recover some of these prices that we've given up here today. Have a great night, everybody. See you tomorrow.